Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index held steady around the 99 level last week. Escalating tensions in the Middle East and a sharp rebound in oil prices unsettled global markets. The US and Israel's campaign against Iran entered its 7th day, while Tehran launched fresh missile and drone strikes across the Gulf. For now, DXY is consolidating in a 98.5 to 99.3 range, with Middle East developments remaining the key driver. WTI crude surged to $88.66 last week as supply concerns around the Strait of Hormuz intensified. Roughly 20% of global oil and LNG flows through this critical choke point, and rising geopolitical risk has translated into a substantial risk premium. Tankers are facing delays, insurance costs are soaring, and Gulf exports have declined sharply. While pipeline alternatives and US output could ease pressure, markets are increasingly pricing in prolonged disruption. Gold experienced extreme volatility last week. After hitting a record high near $5,420, prices plunged 4 to 6% in a single session, briefly dipping below $5,000 before rebounding above $5,100. Initially, escalating Middle East tensions drove strong safe haven inflows. However, as the US dollar strengthened and treasury yields climbed, the opportunity cost of holding gold increased sharply. Inflation fears linked to rising oil prices also triggered a macro repricing. Yen traded just above 158 last week, hovering near a 6-week high. The backdrop is clear. Geopolitical tensions have boosted demand for the US dollar, while expectations for Federal Reserve rate cuts have been pushed back. Meanwhile, Japan's latest CPI slowed to 1.5%, below the Bank of Japan's 2% target, delaying normalization prospects. With resilient US data and rising oil-driven inflation, yield differentials remain supportive, keeping yen underpinned by both policy divergence and safe haven flows. Euro traded below 1.16 last week, near its lowest level since mid-January, as markets assessed escalating Middle East tensions and renewed inflation risks. Surging energy prices are expected to keep inflation elevated across Europe, complicating the ECB's policy outlook. While higher energy costs weigh on the euro, recent repricing in European rate expectations has narrowed swap spreads versus the US, offering some support.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.